Hey everyone, it's Ian for Bold Profits, and welcome to the first of my new video series. I'm going to be doing these videos every Friday, and I'm going to be talking about kind of an opposing viewpoint to all the negative headlines and things we're seeing in the media on TV, like CNBC or any other financial station, or online, like on the Wall Street Journal or Bloomberg. There's just all these negative headlines, and I just want to kind of give an opposing view that we believe at Bold Profits Daily, this kind of the opposite. So you can look at the situation that we're in a lot of different things in two different ways. And a lot of the media reports the negative way, and it really scares a lot of people out of the stock market. Meanwhile, the market's going up to new highs. The S&P 500 just hit 3,000 for the first time in history. And so there's a lot of reasons to buy into the market right now. And they're all getting kind of suppressed by these negative headlines. And so that's mostly what I'm going to be focusing on. This week, I want to talk about all this stuff about interest rates that we've been hearing about. So there's a huge chance that interest rates are going to be lowered this month. And that is really good for the economy. And to kind of simplify that, you can also imagine how that would affect your life. So if someone came to you and said, we're going to lower your credit card rate, or we're going to lower your mortgage rate or your auto loan rate, or anything like that, that would be good for you because that would give you more disposable income. You could save money, you could spend money, put it back into the economy, and it would just be a good scenario for you. And on a large scale, that's kind of what it does to the economy. It boosts growth. Companies have more cash. It's easier to pay their debt, and it's easier to just keep more money on hand. They can use that money to grow their business. They can give it to shareholders and dividends and things like that. And it just overall is very good for the economy. And like I said, the economy is already strong. So if they do lower interest rates, which we believe that they will, that would help growth even more. But what you're seeing now is kind of some kind of deception going on in the media where they're saying that we need to justify this, and we need to justify it by saying that the economy is bad, and that's why they need to lower interest rates. So when good news comes out, like last Friday, there was a jobs report that said that there were, I think, about 60 or 70,000 more jobs added to the economy than expected, which is amazing. And that's just one piece of great data that we've been seeing for the economy over the past few years even. And they took that and they said, now they're not going to lower interest rates because the economy is looking strong. And really, that doesn't make much sense at all, but it did cause some panic. The stock market dropped about 1% within 15 minutes of that news coming out, because they just relentlessly just bashed it. And they said, now everybody needs to sell because they're not going to lower rates and the economy is just going to tank and the market's going to tank. And now there's all this uncertainty. So you should be afraid and you should sell your stock. And that's what happened. And when the market goes down 1%, that's not a small move. That's about $500 billion worth of investors' money that could have just disappeared. If I'm sure a lot of people did sell and they ended up losing money, and they might still be on the sidelines. Meanwhile, the market's making new highs. But just to get back to the point, we believe that interest rates are going to be lowered. We don't think that good news is going to hinder that. But what we kind of rationalize this by is saying that within the past 2 years, there have been 7 times where interest rates have gone up. And I can say for certain that if my mortgage rate went up 7 times in 2 years, I wouldn't be very happy about that. I'd be like, we need to do something about this, because if you keep raising my mortgage, it's going to be harder and harder for me to pay my monthly payment. And it's going to be bad for my own kind of financial stability. And it's also it could be bad for the economy. Like I said, the economy is still going strong, but if they keep up raising rates at this pace, it could do some damage. So what they're going to do is they're going to lower rates to kind of just ease the pace at which they are raising them, because if you raise rates 7 times in 2 years, that can hinder growth. If you do that for 3 more years, you got high rates that could do some damage to the economy. That's basically the point that I want to make, is that it's not because the economy is bad. That's not why they're lowering rates. They're lowering rates to prevent the economy from kind of entering a period of stagnation or even downturn. And like the economy is strong. If they lower rates, which we believe that it's pretty much a certain thing that they're going to lower rates, if not this month and within the near future, by the end of the year for sure, we believe that rates are going to be lowered, and it's a high probability even for this month. And that is going to make this strong economy even stronger. So we do believe that it's a great time to get into the markets, and I just wanted to kind of get our argument out there so that people aren't fooled by this other narrative going on that the economy is bad, and if they don't raise rates, it's going to crash. So that's what I just wanted to say about interest rates. The other thing I want to talk about in these videos from week to week is just kind of trends that I'm seeing going on with millennials, because if you invest in a generation, that's going to be a huge payoff, because you got millions and millions of people in America buying these stocks. The entire kind of group of people that I know, millennials, because I am a millennial, obviously, and I do talk to a lot of millennials, and I try to see what they're not only investing in, but also just things that I notice that we like. And so this week, I want to talk about pet care, because millennials are huge pet lovers. Now we are bigger pet owners than any other generation. We just passed baby boomers, I think, last year. And within the past year, millennials have spent over $70 billion on pet care supplies. So food, medicine, toys, anything like that. And we're seeing kind of this trend in the market now where these investments are really starting to heat up. And this is just the beginning of what I said. Like, it could just be a generational rally. So you got 20, 30 years of growth ahead of these stocks, because we're going to be buying pet care stocks for years. And these stocks have so many not only buyers for the stock, but also just customers. People are using websites like Chewy, which just became public. That's like the Amazon of pet supplies. So you can get food on there. You can get any kind of pet supplies, really, for good prices, and it's really convenient. Obviously, we also like e-commerce, because we can just order from our house and it's delivered in a couple days, especially with free shipping. You got stocks like IDEX Labs and Zoetis for pet medications. So obviously, we want to take good care of our animals. We want to get good medicine for them. You know, there's Pet Med, which is another pharmaceutical company for pets. Fresh Pet is another food company. So we're seeing the emergence of all these different pet companies. And I can personally attest to this, because my wife and I are huge animal lovers. And we, just on the inside of our house, we've got 2 dogs, 2 pigs, a bunch of sugar gliders, a cat. Outside, we basically have a mini farm going. So we've got chickens, quails, guinea hens, pheasants, emus, goats, and I think that's it. Oh, we have geese too. So maybe you might get kind of a sneak peek at those animals coming up going forward. But we are a perfect example of this kind of generational demand that's going to be behind these pet stocks. Obviously, more and more millennials are kind of shifting in this way. They're realizing that, wow, I'm not the only one that loves pets, and this whole generation is going to be buying these stocks and supporting these businesses for years to come. So make sure you keep an eye out for our Bold Profits newsletter, because we might have a recommendation in there to get into this huge generational trend in the stock market that we believe is a great investment for the long term. That's it for this week. This is Ian for Bold Profits. Everybody, happy Friday and have a great weekend.